Okay, welcome here, ladies and gentlemen. This is going to be the first video in a series of videos where I am going to teach Forex trading from the scratch, from the very definition of Forex trading. That is what these videos are going to cover. So it's going to be in a playlist. It's going to be called Forex Basics or Forex Beginning. I'm sure you will see it in a playlist there. So I will keep adding videos to it as this series progress, right? So once again, this is Blessed FX Academy, where we make Forex trading simple and profitable. So you can take advantage of this opportunity to learn what exactly you need in trading, right? So before we dive in, I need you to do the YouTube business. And you know what the YouTube business is all about. Subscribe to the channel if you haven't. I would like you to like the video as well so that YouTube algorithm will push it to other future traders, right? I also want you to drop a comment on the next thing you want me to make a video about, and I'm definitely going to respond to your comment. With that being said, this series, this video, it is meant for beginner forex traders. However, if you feel like you're an intermediate or you're an expert, you can still learn a thing or two. So stay with us, stay tuned, and keep watching. If you want to get a complete forex training very fast without having to wait, you can check the link in the description to see what exactly we have in store for you, a complete proper training, everything, right? So you can check the link in the description. With that being said, let us dive in. So forex trading. What exactly is forex trading all about? When you hear the term trading, what does it mean? When we talk about forex trading and trading other things, commodities, synthetic stock, crypto, what exactly are we talking about? What does it mean to trade, right? So before I talk about forex trading, I would like to discuss the meaning of forex itself. Forex simply means foreign exchange. So foreign exchange has been shortened to forex, and it was even shortened further to FX, right? So it is simply the trading of one currency for another. That is the beginning. That is where everything started, right? Trading one currency for another. For example, when you swap the US dollar for euros, when you exchange it, you have engaged in foreign exchange, right? Someone from Spain who is about to go to the United States needs to swap euros to get US dollar, right? To be able to spend in the country in United States. That is simply foreign exchange. So now you can see that everybody is involved. It is a decentralized global market for the trading of currencies. So that is the beginning of forex. That is simply the beginning of forex. Okay, so it is all about the foreign exchange rates for each currency. Right? So it includes all aspects of buying, selling, and exchanging currencies, at the current or determined prices. So by trading volume, it is the largest market in the world. I'm talking about Forex, it's foreign exchange. It is the largest market in the world, followed by the credit market. So all these things are just theory. We'll look at the characteristics of Forex. It is the largest online market. It is easy to start and cheap. Now we're talking about trading itself, the Forex trading. Anybody can trade Forex. All you need to do is just create an account. I'm going to be showing you how to create an account very soon by the third day. So anybody can trade Forex. Anybody can learn the skill and make money from it. So it doesn't consume time, right? It doesn't take time. Within few minutes, you can place some trades. There's no limit to your income. It operates 24 hours. It's always available, right? Now, some parts of Forex trading closes for the weekend. That is what we call the normal Forex. For example, Euro USD, it is a Forex pair, it is a currency pair. It will close during the weekend. You will not be able to trade it. However, synthetic pairs are available to trade during the weekend, right? And if you check the link in the description, you will see a video I have on how to trade synthetic pairs. So in case that is something you want to get deeper in, you can get started. I also have a playlist on that on the channel, so you can check that out. So what exactly is Forex trading? We've explained Forex. Now, there's a difference between Forex trading. So in Forex trading, we are simply predicting the movement of the markets. So we use strategies, we use tools to aid our accuracy. We are trying to get the direction of the market. So if we're right, we make money. If we are wrong, we lose money, right? So that is Forex trading. You want to get the direction of the market and place a trade on it. For example, if you believe the market is going to go up, all you need to do is what? Place a buy, right? And the market is at this point. If you believe from here it is going to start going up, you can place a buy at this point, right? And if you get to this point, you believe the market is going to start coming down from here, you can place a sell. If it comes down, you'll be making money from that, right? Very simple. So that is what Forex trading is all about. We're placing a buy or a sell on a pair. It is not just one currency this time around. It's not just placing a buy on USD or a sell on euros. No, they have to be paired. Euro USD, USD JPY. JPY is Japanese yen. You understand? GBP JPY. GBP is Great British Pound, which is obviously pounds. So GBP USD, right? They are paired together. So that is what we do in trading. Find the direction of the markets. We place a buy or a sell, depending on the direction, right? So pretty straightforward. You can see this video for some more explanation on that. You see the movement. You see that the market is constantly going up and down like that. So your job as a trader is to figure out how to be able to place a buy at this point, how to be able to place a sell at this point, right? When you place a sell here, the markets come down, you are making money. When you place a buy here, the market goes up, you are making money, right? So it's like what they say, you buy low and you sell high, right? You buy low and you sell high, okay? So you can always close the trades anytime you want to. In the next video, I'm going to cover the apps that we use, the terms and other things. So for now, I just need to give you a good background knowledge of what Forex trading is all about, right? That being said, let us move to the next slide. So buying and selling in trading. When you buy, you are simply predicting the market will go up. When you sell, you are predicting it will come down. That's all. So it is not like the buying and selling you do in a supermarket, right? Or the type you do on Amazon, where you place a buy on something. When you buy in a supermarket, it becomes yours, right? When you buy cake, or you buy fruits, or you buy shoes, they become yours. You can take them home, right? So if you want to get back the money you've spent on buying it, you have to sell it, right? You have to sell it again. Or let's say you're a businessman, when you buy goods, then you sell it higher to make money, right? That's not the kind of buying and selling we do in trading. When you place a buy on any of these pairs in trading, you do not become an owner of it, right? It's not like you own it and you have to sell it back to make money. No. When you place a buy, you are simply just predicting the movement of that currency pair, of that pair, whichever pair it is, right? It doesn't have to be currency. That pair it is. When you place a buy, you are simply saying it's going to go up. When you place a sell, you are saying it's going to come down. That's all. Right? So that is simply what we are doing. So it's just you predicting the direction of the movement of the market. Okay, I could go a little bit deeper to say that when you place a buy on Euro USD is euros and USD as a pair. Like I said, you are trading pairs, not individual currency. So when you place a buy on Euro USD, it is the same thing as placing a buy on euros and automatically placing a sell on USD, right? I could go on to explain it further that way, but it might begin to sound a little bit more complex. And you really don't even need to know all that, right? All you need to know is that placing a buy means you're predicting the market to go up. So if you place a buy at this bottom here, and the market is going up, you'll be making money, right? If you place a buy, let's say you place a buy at this point, and instead of the market going up, it starts coming down, you'll be losing money. However, you can always close the trade and stop the loss, right? Very important. So when we get to tools and apps, you will see how exactly to place a trade and things like that. So that being said, let us dive in deeper. So why should we trade Forex? First of all, it's very flexible. You can trade different pairs. There are hundreds of pairs that you can trade. There are so many countries, and each of them have currencies. Now, most of these currencies are paired against one another for you to place a trade on them, for you to trade them, right? So come on, there are so many. The next thing is leverage. You get leverage when you place a trade. The goal of leverage is to increase the capacity of your capital, to increase the purchasing power of your capital. That way you can do huge things with it, right? We'll talk more on leverage. Then there's accessibility. That's the third reason why you should trade Forex, because it is accessible to everyone. Anybody could just download an app and start to trade Forex, right? So source of income is the next thing. And the source of income, I mean, you make money from trading. There are few fees and commission, zero tax for most countries. Then you can also automate it and stuff like that. So we'll get into some of these things better. How to become a profitable Forex trader. The first thing is to learn Forex properly. Now you've already started by beginning this free training, right? Make sure you continue till the end. Like I said, if you want to complete training, you can check the link in the description. The training comes with mentorship, right? Because having a mentor is the next step to becoming a profitable Forex trader. You need to have someone you can ask questions, someone that can guide you and correct you, things like that, right? So that is it about having a mentor. So you need to trade with discipline. Trading with discipline is because, I mean, you've learned how to trade, you have someone to guide you. The next thing is, are you actually going to follow this information, these rules? Are you going to follow them, or are you going to become what I like to call an undisciplined trader, the kind of trader that fails to follow the rules, right? So I don't want that for you. I don't pray you become that type of trader. So become a disciplined trader, trade with discipline, follow trading rules, and choosing a good broker is the simplest one, right? It's the simplest option. And yeah, I'm going to talk more about brokers as we get on in this playlist, in this free training. I'm going to talk about it. But if you check the link in the description, there is a link to a proper broker you can register, and even a video guide, right? So I've done all that for you because I need you to be able to follow the right thing, right? I need you to be able to trade properly. And no better way to do this than providing you with everything you need. So more reasons for you to trade Forex is because it is volatile. Volatile means it is always moving, right? It is always moving. And because there's a lot of movement, it means when you place a buy, if the market is going up, you're making a lot of money because the market is moving fast, right? It's volatile. The market is dormant and it's just moving sideways, just moving like this. You can't make money from here because when you place a buy at this point, instead of it to go up, it will keep moving like this. You can't make money. So this is something that is dormant, it's not volatile. But the Forex market is volatile, always moving up. You saw the video I showed you, right? We are going to go to the chart next. I will show you how to see some of these movements. Everyone is into Forex. I mean, every country depends on imports and exports. And to do that, you need foreign exchange. So everybody is into Forex. So since everyone is into Forex, especially the government, shouldn't you trade Forex? It makes more sense for you to trade Forex. There is lots of opportunities and you get to make money. You can even use it as a hobby, right? To have fun. Looking at the chart, the screens, getting results, playing around, being able to look into the future to predict the next movement of the market. That is a lot of fun, trust me. So, participants in Forex, it is not only you and I that trade Forex, other big corporations do as well. The Forex participants are, we have the central banks from the government. The government uses them to affect interest rates, loans, and the likes. These things affect the value of currencies, so they participate in Forex, right? Financial institutions, hedgers, big companies that speculate, the hedge funds. And then we have the retail participant. Retail participant is you and I that come with our little capital to try to grow it in the market. That's retail participants. And we make up 80% of the participants. However, we only bring 20% of the capital, right? Because, no matter the amount you have, the central bank has way more, right? So history of Forex, I wanted to skip this, but maybe you need to know it. Forex has been existing before the internet, obviously, during the time of trade by barter, of normal exchange, when gold was a commodity, when gold was the means of exchange. Back then it was Forex as well. Gold, silver, bronze, precious stones, cowries, we use them as means of exchange, right? So there were times when if you want to place a trade on Euro USD, you have to call your broker on the phone, right? You have to call the broker on the phone to open a trade for you. Right now, you can do it on your phone with your internet, with the internet. So what that simply means is trading has been existing long before you gave birth to anybody alive. Forex has been existing. It has been existing for centuries, right? So it is not going anywhere. The internet just helped facilitated it and made it possible for us to get in easily, right? Makes sense. So what makes Forex market to move? I'm sure you are wondering. I've been seeing a lot of movement. You've shown me the video, the market is going up and down. And you might be wondering, you might be willing to ask, what exactly is making this market to move? Very important, government regulations, right? The activities of presidents like President Trump, when he makes a statement, when he tweets, when he says something, it affects the dollar, right? Unemployment by the government, NFP news, right? These things affect currencies, and of course, it's causing the movement in the market. So, forces of supply and demand. You understand? Demand by participants. Participants, they help to activate and force the market to move, right? Then we have big company activities, like your Apple, your Google, when they want to build or when they want to import lots of goods from a particular country or exports, they will demand currency and it will affect the movement, right? Banks and big financial institutions. Then we have unforeseen circumstances like war. Unforeseen circumstances like war, like the war of Ukraine and Russia, it affects the currencies. Natural disasters is an unforeseen circumstances as well, and it affects these currencies, right? So it makes the forex market to move. Now, forex instruments, what do we trade? I know you're wondering. We've said we place trade. What exactly are we trading? Yes, I've said it's a pair, but it's not just the currency pairs. There are other pairs that you can trade, and they can be divided into 4 major groups. We have the currency pairs, we have the indices, we have the commodities, we have the cryptocurrency, right? We can also trade crypto in forex. So currencies, the major currency pairs, Euro USD, USD JPY. Anytime a major economy is paired with USD, it becomes a major currency pair. Euro is a major economy. Japan is a major economy. GBP USD, major economy paired with USD, right? So there are 8 major currency pairs, and you can easily search for more. That is your assignment. Mention 2 pairs in each of the categories above. Minor currency pair is 2 major economies that does not include USD. For example, GBP is a major economy, Euro is a major economy. When they are paired together, they become minor currencies. You understand? So USD is the king of the market, is the king of the forex market. So that is why is very strong. So Euro JPY is another minor currency pair. Then we have exotic pairs. We have exotic pairs such as USD MXN, right? MXN is Mexican pesos. So anytime USD is linked with a developing country, Mexico is a developing country, it's not developed, it's a developing country, a developing economy. Anytime USD is mixed with it, it becomes an exotic pair. So USD MXN, right? So we have commodities. Commodity is something we can also trade in forex, such as gold, silver, oil, cocoa. Now, it doesn't mean you are getting it physically. No, it simply means you are placing a trade, a buy or a sell, right? Predicting the movement of the commodity. You understand? Now, I know it is called gold, but it is listed as XAU USD. XAU USD. Let me write that outside so you can easily see it. XAU USD. You understand? So that is how it is written as. So once any of these commodities are just called their normal name, just know it is paired with USD. Like I said, USD is the king of the forex market. So we have silver. Silver is XA. Now, if you're a science student, you already know AU is the symbol, is the chemical symbol of gold. AU is the chemical symbol of gold. So obviously, silver will be what? XAG, right? XAG USD. XAG. So I'm going to show you these pairs on the chart. You understand? Then we have oil. Obviously, oil is also paired with USD. Cocoa is paired with USD. some brokers offer these things for you to trade. Brokers are the companies that give you access to trade. You create accounts with them, deposit and withdraw. We'll talk about that by the third video in this series. So I just needed to pay attention and follow. Okay, that being said, now we have the third category of pairs we can trade. We call them indices. We have the stock indices and the synthetic indices. Examples of stock indices are S&P 500, Japan 225. As a Forex trader, you don't have any business with them. But as a stock trader, of course, these are some indices you can trade, right? But we are focused on Forex trading now. Synthetic indices is something we trade as Forex traders. We have volatility 75 index, boom and crash. These are synthetic indices, right? So your assignment is to mention 2 pairs in each of the categories above. I need you to submit the assignment in the comment section. You can just drop them, mention the 2 pairs in the comment section, right? So I want you to do that just to be sure, and I'm obviously going to reply as well. That being said, then cryptocurrency is another thing we trade. BTC USD, you will see them listed as BTC USD, ETH USD on your broker when you want to trade. So that being said, these are the major categories of pairs that we can trade. So we are going deeper, we are getting on, and I am happy that you've watched to this extent. So once again, if you've not subscribed, kindly do that. It's important so you don't miss the next video. Turn on your notification as well so you don't miss the next video I'll be uploading on this playlist, the Forex Basics playlist, Introduction to Forex, so you know what exactly is happening in trading, right? So I'm glad you've made this move, and let's dive in. So the Forex chart is simply a representation of movements in the market. So I showed you a video that includes candlestick chart, but there are others, form of lines, bars, and the like. So I'm going to show you on the chart, like I said. After the slides, we are moving straight to the chart. This is a bar chart. This is a line chart. This is a candlestick chart representation. A candlestick chart with indicator. This indicator is called the Bollinger Band. So of course, we'll get to indicators when we get to strategies and the like. So there you have it. And so I'm glad you've been able to watch to this extent. Right now, we are going to switch to the charts. We are going to switch to the charts. The charts I want to use will be tradingview.com. Now, TradingView is important. It's a website you can use to analyze the market. So you can just go on to tradingview.com and let us go on from there. Let me share my screen so you can still see what exactly is going on. So tradingview.com, yeah, I would highly recommend. So yeah, that being said, click on launch super charts. Just go to tradingview.com, launch super charts, and you'll be good to go. Of course, you can download the app. In the next video, I'm going to recommend more apps that you need for trading, and how to use them. So this is GBP USD, right? This is GBP USD, and yeah, GBP USD. So we can go on to, you can see what the chart looks like, right? I have a video on my channel on how to use this trading view. I have a video on my channel. Maybe I'll drop the link in the description to the video, or you can just check my channel, just view the channel. You will see trading view both for your mobile device or for your PC. That's the website, right? I'll show you how to use both of them. It's right there in my channel. You can just check it. In case you want to know how to use all these tools, it's right there. Okay. That being said, we can click right here to check another pair. We can type Euro USD, Euro United States dollars, right? So this is an example on it right here. Amazing stuff, great stuff. So I don't want this video to be too long. It's just an introduction to Forex trading. And the next video will dive deeper and you'll be understanding more and more of what we are saying, right? So this is the time frame. You can change it from maybe to 1 hour. Change it to 1 hour. Let me click on these settings and to fit to screen. Like I said, you can check my channel to know how to use TradingView. This is a candlestick chart. You can click right here. Change it from candles to line. But candles is what I will recommend to you as a trader. Candles are better. Candles charts are better, right? let me change it back to candles. Just candles, not any other form of candles, not hollow candles, not volume candles, just candles. Okay, so let's check gold. Like I said, if you type gold, it comes off as just this. So this is not the proper one. I will recommend you use XAUUSD. XAUUSD is better, right? So it's going to write it as gold. So gold, US dollar, you understand? You can check others. There's instead of XAUUSD, you can check others. You know, XAU euros, right? XAU GBP, right? They're all there. But however, XAU USD is what we refer to when we say gold. When someone said I'm trading gold, it's talking about XAU USD. So there you have it. Okay, we have XAG USD. So let's look at silver. This is silver. This is what the market looks at on silver on 1 hour time frame, right? So we'll get to how to use this time frame and what exactly is all about and all that shit. But for now, I'm glad we've gotten to this level. Now you can see the chart, you can see the pairs, and you can see their movement, right? At some point, you understand, if you had placed a buy at this point, you will go on to make all this money, right? If you had placed a buy up here, you go on to make all this money. Very simple, very straightforward. So I'm glad you've been able to do that. Now, let me show you how to see these synthetic indices. I mentioned synthetic indices, how to see them. Just go to trading view, tradingview.deriv.com. Okay, deriv.com leave. Now, I told you already, if you want to watch more on, if you want to watch more on synthetic indices, check the link in the description. You will see a video that guides you on synthetic indices. So you can do that. You should do that, right? However, this is a video that guides you on TradingView. This is a video that shows you how to assess these synthetic indices. But if you want to know what it's all about, just check the link in the description to watch my video on it. So this is volatility 25 index. You can click on this spot to search and delete what is written here. So click on derived. You will see so many synthetic indices. There is the step index. We have the boom 500, boom 300, boom 1000, crash 1000. We have the jump indices. We have the volatility 10, 1S. We have the volatility 10 index. So because they are different like that. So these synthetic indices, they don't close during the weekend. They are active throughout 24 hours a day, 7 days a week. They are available 24/7. The Euro USD and the USD JPY and those currency pairs, the commodities, they are only available Monday to Fridays. But these synthetic indices, they are available Monday to Monday. You understand? There is no stop, there is no break, right? So that is why some people are also checking synthetic indices out. You understand? So that being said, that is all for this video. This is just the first video. Ensure you stay tuned and watch the next video on this playlist, which I'll be covering Introduction to Forex Trading. Thank you so much for watching, and I'm glad you've been able to get value. You can drop in the comment section what exactly you want me to check out, what video you want me to make next, and I am going to follow through with it. Do have a nice day.